Hey folks, Dan Frio here with your market update for August 9th, 2024. So there's really no economic news out today, which is a fantastic time to kind of recap what we saw this week. So starting on Monday, we had that crash, that micro crash. Remember that? That's what we're going to talk about in today's video because it's not a U.S. thing that happened. It was actually a thing in Japan. I want you guys to understand it because you have to understand the equity markets and all the markets when you're looking at real estate as a part of your portfolio. So let's get to the report. So what you're seeing over through here, these are the top 6 programs people use when they're buying their first house. Now, they're not my rates. They're not Bank of America rates. There's nobody's really rates up through there that'll match this because why? Well, Mortgage News Daily, they survey lenders all over the country and they ask them these 5 questions. The 5 questions are important because if you don't have those 5 criteria, you're not going to get that rate. So let's go through them. The first one is you're buying, it's going to be your first house. Then it's going to be your primary home where you're living there. And then the next thing is it's a single family home. Now there's 2 other pieces of the puzzle that relate to your credit scores and how much money you're putting down. So let's get over to those and see what those are. And it's right through here. These people are putting down 25% because they're getting lent to them 75% and they have a 780 credit score. So that's probably not you. That's not our normal client. So if that's not you, I'm going to give you all my information at the end of this video because my name is Dan Frio and I'm just a lonely old loan officer out here trying to win your business and explain to you guys what's going on with real estate. So let's get to the economic calendar for today. There is absolutely nothing. You can see it right through here. Absolutely nothing. So let's go to the broader markets. We have the Dow Jones just down 120, S&P down 10, and the NASDAQ down 56. I'm going to basically say this is flat because coming off of Monday's $1,100 debacle, this is basically nothing. Okay, so let's get over to see how those things are looking that we usually focus in on a daily basis. Cryptocurrency it's still going up and it's just teetering at $60,000. Oil, hopefully oil's down. Oh, it's up just a tad, but U.S. oil, crude oil on a pace of a 4% gain this week. That's not good because this will add to inflation. But as long as we're at the 75, 76 mark, it's not going to add a lot to our inflationary numbers. So let's see what happened. What actually happened on Monday? Because a lot of people were crying, okay, we need a Fed rate cut, we needed this, we needed all that, and then it was like 48 hours later and everything's back to normal. Well, at least whatever normal is. Well, let's get through it. CNBC did an interview the other day, and I didn't really want to bring you this topic, but there's no other economic news for today, and I think this is really important for you guys to understand a lot of dynamics on how the markets work. So it's a great learning term right now. What he's going to bring up is the carry trade. So basically what happens in the carry trade, and you'll be able to understand this more when he explains it. I went to ChatGPT and put in here, what is the carry trade? Well, basically in a component, in a nutshell, here's what it is. You borrow funds in a low interest rate currency. Okay, in this case, it was Japanese yen. All right, then what do you do? I gotta open this up so you guys can see it a little bit better. Okay, so let's go down there. You convert that currency into a high yield currency. And then what you do is you go back through and buy stocks in that, and that just compounds your gains. Well, the problem is when the thing unwinds, you can compound your losses. And that's what really happened in the Japanese market. They lost 20%. 20%. You imagine if our stock market dropped 20% in like 2-3 days, it would be Armageddon. So let's get to this video so you guys can understand this, and then we're going to take all this data and figure out what's the Fed's next move. So let's get over to it.
Stocks are selling off globally, with Japanese stocks having their worst day since 1987. For more on what's going on there and how it's impacting us, let's check in with Peter Bookvar. He's the Chief Investment Officer at Blakely Financial Group and a CNBC contributor. Thank you for being here, Peter, as well.
Hi, Kelly.
Let's start with the Nikkei. We talked about this worst day since 1987, but the worst 3-day move we've had since at least 1949. It's a 20% drop for the topics, at least.
The Japanese stock market benefited tremendously from the persistent weakness in the yen. Now, there are other positives that the Japanese economy has been going through, particularly corporate Japan, in terms of corporate governance, returns on equity, unwinding share cross holdings, and so on. So there was a fundamental story to Japan. But I think what this is reflecting in is how much money people borrowed in yen to buy Japanese stocks, among many other assets that are now unwinding.
And this goes back to their rate hike last Wednesday. Same day the Fed was holding rates steady here, the Bank of Japan decided to hike rates. It wasn't exactly their first rate hike, but it was one of just a couple since, March or so? Why did that so quickly kind of push things to the other side of the card?
Well, it's sort of revealing itself. The Fed started raising rates in March 2022. It took the BOJ 2 years later just to get them out of negative interest rates.
Do you think they should have gone sooner?
Okay, when he says BOJ, it's the Bank of Japan. So it's kind of their Federal Reserve. Just another learning tool.
Should have gone sooner when inflation was persistently above 2%. But by waiting every month that went by, more borrowing was taking place in yen. It was the last place in the world to sort of get free money. And that free money, we couldn't necessarily quantify, but we're seeing sort of the result of the unwind now to say, wow, that was massive. We didn't really see it while it was going on to the extent that it's revealed itself to be, but it was obviously massive.
So here's the overnight rate, which we can see was negative for so long. Japan was trying to stoke inflation, and they had it. They had 2% of this, but they didn't move to raise rates until very, very recently. They got off of negative, as we saw in, what was it, maybe March. Then they finally hiked again up towards a quarter point last week. But it was this period that you think allowed all of these carry trades to build up?
Exactly, because other central banks, the Fed I mentioned, the ECB, the BOE, the Bank of Canada, all the world's central banks were raising rates except the Japanese. So if you're a carry trade person who borrows yen, well, you're borrowing cheap, you're getting a weaker yen, and you're speculating in all these different things, whether it's Bitcoin, gold, or tech stocks. So you were making money on both sides.
Yep, and here's the yen weakening to support that all the way really here through its peak just about a month ago. July 10th was when the Mag 7 peaked. We're down 20% since then. Similar move here. The yen has gone straight down to about 144 today. What do we watch for now?
So I think we need to see this sort of exhaust itself. The Japanese market has essentially crashed. 1987, when you have crash in 1987 in the same sentence, it tells you this is rather dramatic. The Taiwanese stock market at its worst day since 1967.
And Korea, too.
And Korea, too. So I do think this is about to exhaust itself. Now, is that the all clear? I'm not so sure, because we also have other worries like economic growth and questioning the AI trade and whether tech can continue to lead the way. So this
of course,
is sort
it all has to happen at the same time.
Well, that's the thing. This all came together all at once at the same time that sentiment was extremely bullish. You had excessive levels on the technicals in terms of the S&P relative to its 200-day moving average.
You said it was about 15% above the 200-day?
Usually about 13%, it gives me a red flag.
Wow.
Got to 15%. And then, of course, the global growth concerns and questioning the AI trade and all the investment and the monetization and so on and so on. Everything came together.
It got a little bit lengthy there, but I hope you understand what's going on. People were let's go back to the chart. They were doing exactly this. They were borrowing funds in low interest rate currency, which was the yen. Remember, he said it was negative rates that you had to pay. So actually, they were paying you to take the yen. You're buying it in speculative stuff like gold, Bitcoin, tech bubble, and all that other stuff. As those run, you're killing it. You're making money on the investment, like Bitcoin. If you would have used this basically free money to buy Bitcoin, just last Friday, it was 49,000. It's 59,000 today. So, but when these things unwind, it multiplies your losses. So that's what basically happened, and it basically caused havoc all over the place, which was hopefully good news for our economy. You could see that if there's a little dink in the armor right now, the whole markets are imploding because they're all on the bubble right now of what to do. Okay, so that's what's going on right there. It's through there. So let's go over to see where rates are going to go for the day. So we go over to this technical right here. What you're looking at on your screen right now is the MBS market. This is the mortgage bond that trades on Wall Street. This is how we follow rates. You don't follow the 10-year Treasury. You don't follow the Federal Reserve, what they're doing. You follow this right here. Okay, it's really hard to find. So if you're in the mortgage business, highly suggest you get MBS Live. It's down below. I use it daily, and it helps me tremendously in business as well as with my videos. So you can see right through here, the MBSs, if you take a quick glimpse in there, they're up 14, I'm sorry. What you have to understand about the mortgage bonds is that when the price of a bond goes up, the yield comes down, and it's reversed the other way. Let me explain it to you. I try to do this every couple weeks. I'm going to make it simple for you. So let's say that a bond, whatever bond, in this case, we're going to say it's a mortgage bond. Let's say it's maturity value. When it comes to maturity, when it's everything's said and done, it's worth $100. Okay, so we're going to say in this analysis, next year at this time is when this bond comes due. Okay, so I'm going to show you how when the price goes up, yields come down. Okay, so we're going to say today I'm going to pay you $50 for that bond. And it was kind of like yesterday's video. If you watch that, I kept saying, the prices of these bonds are going down because investors, there's too many bonds in the market, so they're not buying this stuff. So they're waiting for the prices to come down to a point that they really want to buy. and they'll buy. Well, as the price comes down, the yields go up. Okay, so the example is here, I'm going to give you $50 today for that $100 bond when it matures. Okay, so I give you $50, you give me the bond, I sit on it for a year comes by, the bond comes to maturity, and I'm like, okay, here's your bond back. Now give me my $100, the face value of that bond at maturity. So I paid $50 and I got $100 back. What was my yield? What was my return? I doubled my money, so it's 100%. Okay, so now let's flip it around. I'm going to jack up that price all the way to $100 to make this example a little more simple. So today I give you $100. You give me my bond. I sit on it for a year. I give you the bond back, and the bond, remember, the maturity is $100. So you give me my $100 back. Well, what was my return? I gave you $100, and you give me $100 back. The price was high. My return is zero. So you see it at $50, a low price, my return was much higher than if I paid a higher price. That's how it works. Okay, and that's how it worked with these bonds as well as all other bonds. So that's your lesson for the day there. Now, what's the Federal Reserve going to do? Let's go to our CME FedWatch tool. What is this for the newbies out there? If you go to the CME FedWatch tool, it's basically telling us what the Fed's projected. I'll say projected to do. And in 40 days, the next meeting's up, and here it is. What's the likelihood the Federal Reserve will change the federal funds rate at the next meeting? We have to understand what the federal funds rate is right now. So it goes in a range. So currently, right now, it's 5.25 to 5.5. Okay, so let me get my head out of the screen so you guys can see the whole chart. Well, just the other day, it was funny because even the 5% to 5.25% was gone. So what you're seeing across through here, this is the yields. Okay, remember I said current rate is 5.25 to 5.5. It used to be the column right over here. Okay, they go in half or quarter increments. All right, so that's that. Over on the left side, this tells you the date of the next Federal Reserve meeting and what the probabilities are that they're gonna do. Okay, so the next meeting is in September 18th. So if we go over to here, it's saying there's a 54% probability that the federal funds rate will be changed to 4.75 to 5. Well, if it's currently 5.25, we'll just use the first piece of that number. If it's currently 5.25 and they're projecting it to go to 4.75, that means there's a 0.5% rate cut coming from the Fed. Well, at least expected. I'm expecting a quarter. If we get a half, I'm going to even be more happy. But then you can start seeing the probabilities through here. And these probabilities have changed quite a bit since Monday when really nobody knew what happened, when everything was kind of imploding throughout all the markets. Everybody's like, what is going on? Economy's going into a recession. The Federal Reserve screwed up. And then once they realized it was the carry trade, it was like, oh, okay, the world isn't so bad. So I'm not saying the world's perfect. I'm not saying real estate's in a good cycle right now on things because prices are high and rates are high. But if you're out there and you're like, Dan, I'd love to buy my first house because I'm looking long term. I'm not looking, in 6 months, where's my house going to be? I hate to say it, who cares? Okay. It's like I buy Bitcoin for the long term. I buy a house for the long-term investment. Okay, so that's why most people do that. If you're out there contemplating, should I buy a house in today's market? Maybe a refinance will help me out. Maybe a reverse mortgage. If you guys don't know what a reverse mortgage is, maybe your grandparents or your parents might need help with a reverse mortgage. We'd love to talk to them about that. So who am I? What do I do? Well, I'm just a lonely mortgage officer, loan officer out here just trying to make a living and providing you guys factual information to help you make decisions when it comes to equities and real estate. So if you want to check out my channel and my website, you go to my website and here it is. I'm a loan officer at ServBank, so I'm just a loan officer out here. But the good news is ServBank is one of the country's largest mortgage servicers. So we're a pretty darn big company and we can do loans. Okay, we can do loans internally, but here's the benefit to you guys. Being at ServBank, I hold a federal license, so I'm licensed in every state in the whole country, so we'd love to help you. The other piece of this good news is we're also one of the country's largest mortgage brokers. Okay, how does that come into play? So here's what you do if you're looking to buy that first house. You're going to call 5, 10 different mortgage companies, banks, lenders, whomever, and you're going to put in an application. They're going to pull your credit. They're going to call you back saying, congratulations, you're approved. Now we're going to start monitoring rates. So then you go to the next place. They're going to do exactly the same thing. Well, why waste all your time doing all that when you can work with us and use one application, one credit pool, and we're going to shop your loans rates and terms with up to 50 different lenders. Let us do the heavy lifting for you. So visit us at therateupdate.com. You can get that started right there at the Apply Now button. But if you're looking for that first house and you're just struggling, you're like, Dan, I can make the payments. I can even make the down payment. I just can't cover the closing costs, and maybe now I have to pay my realtor. What can I do? Well, check the grant finder right through there. It'll give you grants up to, I think it's $7,500 right now. It'll help you. You can use that money for your down payment and closing costs and whatever you need it for. The nice thing about those, you don't have to pay them back. Okay, that's the benefit there. But if you really would like to call us just to go over your scenario to see, do you qualify? Does this make sense? Will it work? Scroll to the bottom of our website. You're going to find our information right there. So our 800 number is right through here, as well as my email address. And yes, this is my email address, and I will get back to you if you email me over there. So thank you so much for watching, guys. God bless. Have a fantastic weekend if I'm not back at the closing bell. And if you need our help, reach out to us. We'd love to help. Have a fantastic weekend. See you next week.